part B. All right, so once again, Siswami, welcome to our second lecture session. This is part B of our 2025 academic year
Thank you.
discussion. You're welcome. So now we would like to get busy with the 2021 question paper. So now on the 2021 question paper, let me evaluate it quickly so that I can see which question was it. It was dealing with the cash budget.
Okay.
Let me see question one first. Question one is definitely not cash budget.
It's question 4.
Oh, it's question four. All right, no problem. Let me scroll down to question four. Yes, question four appears to be the one. Let me evaluate the required parts. Okay. This one, they wanted 3 months. So they are saying prepare a cash budget for January, February, and March only. Show all calculations. That's what they want you to do. Okay, not a problem. So let's first of all sort out our format, okay? Uh, which is this part. So I just wanna come back here and then do sorting out of the format. So in our 2021 question paper, question four is the one that's dealing with the cash budget. So I'm gonna just draft here and say cash budget for the month of in this case, I think January, February, and March. Did they give us the year?
The year is 2019.
Or it's 2019? Oh, okay. So it's of January, February, and March 2019, like that. All right. So what I'm gonna do now in our format, we're just simply gonna add another column so that we have at least all the three required columns. Okay, so let's just do that. All right. There we have it. So this is January. That's February. And then that's March. Remember, everything is in rands like that. Right. So now, okay, let me just make sure the formats are done. I just want to delete these figures. Right. Okay. Okay, great. So now there we have it. Some of the things here we're just gonna have to delete, but yeah. So the other parts I'll adjust as we do the questions evaluation.
Okay.
Yeah.
Yes.
Okay. So now we have our format in place. So for the month of January, February, and March of question four for 2019. So now I want to go through the question. So the question tells or requires us to draft a cash budget for the month of January, February, and March. So in the information given, okay, why is it moving so fast now? Okay. Uh, Sorry about that.
Mhm.
So the CEO of XYZ Limited, right? So the CEO of XYZ Limited wishes to negotiate with Imali Bank a fluctuating facility of 80,000. So it's a fluctuating facility. That sounds to me like that's a short-term liability. Are we together there? Of 80,000. Now the business has been
Okay.
requested information with regards to the cash receipts and cash payments of the business from January to March of 2019. Now, the first quarter which is of course the first quarter of the new year, you have been given this task and are provided with the following information. Not a problem. So technically, when I evaluate a question, normally to me, this would be purely background information just to give me insight of what is happening. But then the moment they tell me you've been like for instance you've been given this task and are provided with the following. So whatever that is following to me, that I would categorize as my problem area. So the first part, it will be my
Okay.
problem area number one. So we are told sales is expected to total 264,000 and is broken as follows. So these sales we are given, they've not mentioned specifically it's for which month, but nonetheless, it's okay. So sales is expected to total 264,000 and is broken as follows. 25% will be sold in January. All right. So they are simply, so this sales is like the total sales, but then obviously they are giving us a projection around it. So 25% of this amount will be sold in January. 35% will be sold in February, and then the remaining percentage will be sold in the month of March. So technically, it's like this. If I'm to break down their sales projections, so out of the 264, basically it will be 264,000 multiplied by 25% for me to get total sales for January. And then for me to get sales for February, it will be again taking the 264 multiplied by 35%. And then we still have the month of March to deal with. For the month of March, it will be 264,000 multiplied by, so 35 plus 25%, it gives you how much, my sister? And what is the difference out of 100%?
50% difference is 40%.
So it gives us 14, eh?
Yes.
Because this 25 plus 35 it's 60%. So that follows then that for
Yes.
the month of March, your total sales is 264 multiplied by 40%. But notice all of this is just to give us total sales for each month. That's what this
Okay.
information is all about, okay? Now, half of the
Yes.
sales will be made in cash and then half on credit. So now it means out of whatever you're going to calculate here, 50% of it is in cash and then the other 50% is on credit. We want to know how are they going to be dealing with their credit sales. So now debtors usually pay their accounts as follows. 2% will be written off as recoverable and then 60% in the same month the sale took place. Okay, no problem. And then 30% in the second month, and then the remainder in the third month. Credit sales, so that the remainder in the third month, right? Credit sales were as follows
Yes.
during 2018. Oh, sorry, the remainder in the third month. I think this, you see this point, this was supposed to be an individual
Yes.
point. Yeah, so I don't know what happened there. But
Okay.
technically, I think what this is supposed to look like, let me just try to see if we can correct this. Yeah, I think it's supposed to look like this, eh?
Yeah. Yeah.
Yeah, when they say credit sales were as follows during 2018. So this information is necessary because some of the credit sales are collected second month after the month of sale, some of it in the same month of sale and stuff like that, and then the remainder in the third month, you see. So now I want to bring an evaluation or analysis over uh, credit sales collections. So what I want to show you now here is the credit. Sorry, if you may allow me, let me just clear this. So now I want to deal with the
Okay.
credit sales collection. How all I'm doing is just to analyze the question. I've not yet answered it, right? So I want to show you the breakdown
Okay.
of the credit sales. All right. So that when we do it practically now, it will make sense. So with the credit sales, we are understanding one thing that 60% is collected in the same month when the sale took place. When you say if I'm dealing with the month of January, 60% of my credit sales are collected in the same month. Okay. Then the other 30
Okay.
in the second month, meaning to say it will be collected in February. Does it make sense? And then the third one, it will be collected in March. Are we together?
Okay.
Yeah, that's critical. So, but anyway, I think this one it will be ideal if I do it practically as we do the question. But I wanted to just make sure that you have a bit of an understanding of what is happening with A. A is very rich in terms of detail. Then the rest are
Okay.
expenses. I'm just doing a quick overview. So the rest are expenses. These are expenses. Uh, okay. So this is the balance, opening balance. Yeah. Oh, these are opening balances from December 2018, and that's it. Okay, no problem. So I want to start off or deal with this part. So let's deal with this big fish right now. So to do that, my sister, I'm going to
Mm.
expand our screen so that we can do this. Okay, there we go. So now I'm going to show some calculations at the bottom here. But I think for the
Okay.
cash sales, yeah, we can just do it directly. If yeah, we can just do it directly because oh yeah, we can, but it might look too interesting. But let me see if we can do it here directly. So for cash sales, I'm gonna start with January. So it's January. It's gonna be 25. So it's gonna be this 25% uh for January. So let's do that exercise. So we're gonna take the 264,000 and it will be multiplied by 25% basically. Multiplied by 25%. But then here's the catch. The 25% gives you total sales for January. Are we together?
Yes. Yes.
This 25% just simply gives you total sales for January. But then how much of it or how much out of it is making up cash sales? That's where this information comes in now. Where they're saying half of the sales will be made in cash, and then the other half is made where? How? On credit basis.
Good.
Mhm. So that's important. So now we're gonna then multiply this by 50% just to indicate the sales for January. Are we together there? So it's
Yes.
264,000 times the 25% to give us the total sales for Jan, and then we allocate 50% of that amount as cash sales. All right, and then we move on to the other one. So the other one is there's just going to be a slight change in our percentage in the middle there. So what I'll do, I'll just take this as it is just for the sake of time. So it will be 264,000, not this time, not multiplied by 25, but this time it will be multiplied by this 35% and still
Yes.
again multiplied by 50. Are we together?
Yes.
And then you take the 264,000, this time not multiplying it by 25, it will be multiplied by 40% to give us the one for the month of of March. Are we together there?
Yes.
So this is how your calculation would look like. Did you get this one right?
Yes. I think I got it right there. The first one was
Mhm.
33,000.
33K.
Second one, 46. Yes.
Second one.
46,200.
Okay, let's verify
46,200
it. Okay.
and 52,800.
So this one you said 46, ne? 200.
Yes, 46,200. Yes.
And then the other one,
52,800.
yeah, 52,800. That's correct. That's very correct. Yeah. So you got it right over there. And then now we want to do the part which is a bit confusing. So for this one, I'm going to have to show calculations here at the bottom.
Mm.
So the calculation we are doing currently, it's just going to be for the credit sales, okay? So I'm going to call it credit sales collections. We are interested in 3 months only. That is for the month of
Yes.
January, for the month of February, and also for the month of March. Something like that. So for the month of January, it's going to be simple. It's not complicated. What did they tell you about credit sales? So we are told that the other half, which is of course on credit, here's how it's going to be collected. 2% will be written off as a irrecoverable, which we understand.
Mm.
And then 60% is collected in the same month when the sale took place, where the sale took place. Very
Yes.
important information. So now, meaning to say, if I'm dealing with Jan, so we already have this calculation, all right, which is 33,000. So
Yes.
33,000, that's already 50% of the total sales. And that's what also makes up what?
Mm.
Credit sales. So we're just going to take the 33K just so that we don't complicate our calculation, okay? So I'm going to take the
Mm.
33,000 because that's equivalent to 50% of the total sales. But then this amount, I have to multiply it um, with something, with 60%. Okay. Why? Because the 60% of it is collected in January. Are we
The
together?
same month.
When
Yes.
the sale took place. And then of course the other one, the 30% will be collected in Feb. All right. So we're gonna deal with that one later. But what I want you to notice, you can even in fact, let me do this. So this is 33,000. So this is where the other one will be collected. I'm just putting it to the right place where it's supposed to be already. So this will be 30%, okay, of the January. It will be collected in the second month, and then the remainder in the third month. So the remainder will be collected in March. 33,000. So what is the remainder? If you've already collected 90% and out of the 100, I mean, yeah, in this case, yeah, it will be 90% that you've already collected, but you still have the 10% whereby the 2% will not be recovered. So the only one that you're going to recover is going to be 8% in the third month. Does it make
8%.
sense? Does
Yes.
Yeah, very important information that so it means everything to do with January sales or credit sales, I'm done with it. Then what I do now, because I'm not done with January, I still have to then go back a step back from December credit sales that we've already been given. Notice all of these are credit sales, not total sales. These are credit
Okay.
sales. So what we do understand is for the December credit sales of 33K, 60% of it was collected in December. Then 30% of it was collected um wait, something is off here. Wait. Let me start from October. So I was mixing up. Let me start with October because that's the most, that's the late date anyways. So now from October, 60% of their credit sales was collected in October. Then the other 30% was collected in November. And then the third
November.
percent, the third collection was done in December. Are we together there?
Yes.
So we see that it doesn't affect January at all. All right. Then we come to November. We come to November. Now, with November credit sales, 60% was collected in the same month when the sale took place. Then the second payment was collected in December, but then the third payment for November was collected January. Are we together there?
Mm.
So meaning to say,
Yes.
when I come here, I have to then take the 24,750 and I would multiply this by 8% because that's what will be collected in the third month, like that. Are we together?
Yes.
Right. So it means as far as November credit sales are concerned, we are done with them. Then we move on to December. So for the December month, 60% is collected kaka December, and then the 30% in the month of January. So I'm gonna have to show the calculation here where I would say 33K. Yeah, it seems like to be similar with the
Mm.
January. So yeah, 33K times 30%. Are we together?
Yes.
In the month of January. But remember, that is for the second payment. Then the third payment, obviously, it will be done, it will be collected February for the month of December. So I'm going to have to show the 33,000, this time multiplied by 8%, okay? This time multiplied by 8%, representing the third or the remainder of collections. All right. And then,
Mm.
so that's it about December. Yeah, that's it about December because the first payment was already done in December. Second one, it was done in January. Third one, it was done in February. Nothing extended to February. So yeah, that's pretty much about uh January. So there's nothing else that's going to affect January. Now we can totalize the month of January. Now, so if we're gonna do that calculation, but then I want to come back to Feb. So as far as Feb is concerned, we do see that yes, there was a bit of an element of something that came from January, and then there was a bit of an element of what came from December. So now let's start with
Yes.
February's credit collection, right? So with February, we do understand that the credit, the half or the 50% of the total sales for Feb is 46,200, of which 60% of it is collected the month of February. So this would be multiplied by 60%. Does it make sense, my sister?
Yes.
And then the other
It
portion,
does.
it's going to be collected here during the month of March, which is going to be the third percent, 30%, sorry, of the 46,200. Right? So far, so good.
Good, good.
Okay. And then, so yeah, I think that's as far as February is concerned because the third payment will be done anyways in the month of April. But April was not it was not required in our calculation. So I'm not going to do anything for
Mm.
Feb, you know. Then let me see with March. So, because I think as far as February is concerned, we are done with February. So this we have to then get the amount. And then we go for the month of March. 60% of credit sales, some March will be collected in the month of March. So out of the 52,800, 52,800, 60% of it is collected here. Then the other ones in the later months, which we were not required to do. So now this is how your credit sales collections would look like. I'm sure this is where you had gotten a bit mixed up.
Yes, yes.
Yeah.
Yeah. I didn't get it right there.
Nah, yeah. So that's the correct calculation. So maybe we can do the calculation. It's just that actually with my calculator, I don't have my scientific calculator with me right now. Somebody borrowed it. from me, but I'm gonna
Okay.
try to use my phone. But let's see if we can do it together. Mm, okay. So that's okay, so that's 33K times 60 plus 24, 750. Hey, you need to make sure you get it 100% right, eh?
Yeah, yeah.
It's important. So I'm getting something like 31,680 for
Yes.
January. Okay. And then let's see February. So it's 33 times 30%. 33 times 0.08 plus 46, 200 times 60%. I'm getting 40,260.
60, yes.
Mhm. And then for March, 46, 200 times 30 plus 52,800 times 60. How much did you get, sister?
48180.
Yes, 48,180. So those are your
Yes.
calculations, which you're gonna plug in over there. So the first one is 31,680. So it's gonna be 31,680, and this is coming from calculation number one. For the second one, it's
Mhm.
gonna be 40,260. 40,260. And again, this is coming from calculation number one. The third one, it's going to be 48,180. 48,180. That'll be coming from calculation one as well. Something like that. So this is how it's supposed to look like. Okay. Something like that. Okay. There was no proceeds from sale of any equipment in this one. So I'll just remove this part. But anyways, I think as far as this part of information A is concerned, we are done with it, with exception that maybe we might have something that might refer to it. So I'll come back to highlight it later. So then now we proceed to information B. So I just want to evaluate and see what we have been given on information B. So on information B, they are telling us sales personnel receives a commission of 10% monthly sales, and then office personnel receive salaries of 12,000 per month. Both commission salaries are paid in cash at the end of each month. Okay, not a problem. So I think technically, for receipts, we are done. So for this one, I'll just, because there was no any proceeds from sale of an equipment, but then I'll come back to the
Yes.
cash purchases and other things. But so we do have salaries, ne?
Yes.
Okay, so salaries is 12K per month. And how many people are they? They didn't mention specifically. So we're just gonna use the 12,000 rands. So salaries, 12,000. Rents, 12,000 rents. Nothing about it changing, so that would remain the same. And then there's another thing that they've mentioned, which is what? Commission. So I'm gonna write the
Yes,
sales
commission is
commission.
10%.
Yeah. So sales commission is 10% of monthly sales. So it will be 10% of the monthly sales. So for January, this was the total monthly sale. So what you do is your calculation, it will look like this. It's just a matter of taking that. In fact, just let me just copy this entire info because it involves all 3 months. But the only difference is that I'll add the 10% now. Are we together?
No, okay. Okay.
Yeah. So let's see. Okay. I don't know what did I do now? Okay. So let me just show it separately. I think, yeah, it's fine. Take it one by one. I think it would be the best. Yeah, like this. All right. So for this particular one, it would be 264 times 25% times 10% so that we get the sales commission for the month of January. And then for February,
So we're
mhm,
no longer including the 50%.
mm-mm. Because remember,
Okay.
it's for the monthly sales, so it will be for the total, not for the cash sales.
Okay.
Yeah.
Yes.
So it's either you do it the way I'm showing it now, or you're just simply gonna work with the 33,000 times two to give you the total amount of sales.
Mm.
You
Okay.
understand? Yeah. So,
Yes.
but I think to do it this way, it's better because you're trying to show them where you're getting the total sales from, and then you're taking 10% of that
Yes.
to the relevant year. So,
Okay.
mhm. And then you do the same for the last month. So in this case, it's gonna be 40%, and then this is gonna be 10%. All right, it's showing that we're left with a minute, so we might need to reconnect so that we can complete it. Ne?
Okay.
Mhm. So I think in part C, I'll continue from here.
All right.
Yeah. So you just connect immediately and then we can conclude. Okay.